Hello, welcome to Good Minds Learning. In this session, we will see Chapter 16, Bank Transactions. This is part of business studies. In this chapter, we will learn about learning objectives, meaning of banks, banks and post offices in financial transactions, characteristics of banks, different accounts that can be opened in a bank, methods to open accounts in banks, advantages of bank accounts. Let's start. Introduction to banking. What is a bank? Etymology. The term bank is derived from Old Italian word banco, French word banque, both meaning a bench or money exchange table. Definition. A banking company is defined as a company which transacts business with finance, accepts deposits from the public, lends money to those who need it in the form of loans, receives money from savers and provides it to borrowers, repays deposits through checks, drafts, or other forms. Let's look at historical context about banking. Banks developed about 200 years ago. Nature of banks has evolved with changing times. Banking system development is crucial for any country's growth. Thank you for tuning in. Hope you are enjoying the session. Please like and subscribe to our channel, Good Minds Learning. Do not skip the content. If you find it is slow, then watch it with 1.25x or 1.5x speed. Characteristics of banks. Core characteristics. 1. Dealing with money. Financial institutions that handle public money. 2. Institutional forms. Can be individual, firm, or company. Banking company equals institution that deals with money. 3. Acceptance of deposits. Accept deposits from public. Provide security to deposits. Act as custodians of public deposits. Return deposits on demand or after prescribed period. This continuation of characteristics of banks. 4. Lending loans. Advance loans to various sectors: industrial sector, agricultural sector, education, house construction, other purposes. 5. Payment and withdrawal facilities. Enable withdrawals through checks or drafts. 6. Agency and utility services. Provide various banking facilities. Include general utility and agency services. 7. Profit and service orientation. Profit-seeking institutions. Service-oriented approach. 8. Ever-increasing functions. Continuously expand and diversify. Add new functions, services, and activities. 9. Connecting link. Bridge between depositors and borrowers. Collect surplus money and lend to those in need. 10. Primary banking business. Main activity, accepting deposits and lending. Not subsidiary to any other business. 11. Name identity. Always add bank to their names. Examples: Canara Bank, Vijaya Bank, Corporation Bank, State Bank of India, State Bank of Mysore. Functions of banks. Primary functions. 1. Accepting deposits from public and others. 2. Lending money to public loans and other institutions. Secondary functions. 3. Transferring money from one place to another, remittances. 4. Collecting money by checks, drafts, and bills. 5. Discounting of bills. 6. Hiring safe deposit locker. 7. Conducting foreign exchange transactions. 8. Keeping valuables in safe custody. 9. Issuing letters of credit and guarantee. 10. Conducting government transactions, state central. Moving on to banker-customer relationship. 1. General relationship. Primary relationship. Debtor and creditor relationship. Bank as debtor when accepting deposits. Bank as creditor when advancing loans. Subsidiary relationship. Trustee and beneficiary relationship. Bank acts as trustee for customers' benefit. Agent and principal relationship. Bank acts as agent for various customer services. 2. Special relationship. Obligation to honor checks. Bank must honor valid checks when sufficient funds available. Obligation to maintain secrecy. Bank must maintain confidentiality of customer accounts. Next topic is services offered by banks. Financial products. 1. Credit cards, revolving credit facility. 2. Personal loans, unsecured loans for personal use. 3. Home and vehicle loans, secured loans for specific purposes. 4. Business loans, financing for business operations. 5. Mutual funds, investment products. Additional services. 6. Safe deposit locker secure storage facility. 7. Debit cards direct access to account funds. 8. Trust services estate and trust management. 9. Signature guarantees authentication services. Let's see. Banking system in India. Regulatory framework. Reserve Bank of India (RBI). Central Controlling Authority, known as Mother of Banks or Bankers' Bank, formulates monetary policy for all banks. Banking network. Current structure. State Bank Group. There are 20 nationalized banks, 21 private banks, 19 foreign banks, 8,000 bank branches network. Rural banks, regional banks, government and private banks. This is an interesting bit. Did you know? The Indian Postal Department is planning to start Postal Bank of India, with over 1.55 lakh post offices, 90% of which are in semi-urban and rural areas, with a capital investment of 1,000 crore rupees. Moving on to types of banks. Classification by function. 1. Central Bank Reserve Bank of India (RBI). 2. Commercial banks general banking services. 3. Industrial development banks industrial financing. 4. Land development banks agricultural and rural development. 5. Indigenous banks money lenders or SACARs. 6. Cooperative banks member-owned financial cooperatives. Let's see. Types of bank accounts. 1. Savings bank account. Target users: salaried persons, students, senior citizens, pensioners. Purpose: encourage savings and pool funds. Features: no restriction on number and amount of deposits. Withdrawals through check or withdrawal slip. Interest paid on deposits. 2. Current account. Target users: businessmen with regular transactions. Features: unlimited deposits and withdrawals per day. No interest paid generally. Service charges applicable. Suitable for frequent transactions. 3. Recurring deposit account. Purpose: future financial goals weddings, purchases. Features: monthly deposits for fixed period. Higher interest than savings account. Lump sum payment with interest at maturity. 4. Term deposit account fixed deposit. Features: fixed period deposit 1 month to 10 years. Cannot withdraw before maturity. Higher interest rates based on term length. Most suitable for long-term savings. Did you know? Joint account. An account opened and operated by 2 or more persons together, requiring joint signatures for operations. Now we will see. Procedure to open a bank account. Step-by-step process. Step 1. Decide account type. Choose from savings, current, recurring deposit, or term deposit. Consider your financial needs and transaction patterns. Step 2. Approach bank. Visit chosen bank branch. Meet bank officer. Express intention to open account. Receive required forms and instructions. Step 3. Fill application form. Complete all details: name, address, occupation. Provide 2 to 3 specimen signatures on signature card. Submit passport size photographs. For joint accounts, all holders must sign. Step 4. Provide reference. Introduction by existing account holder. Reference from respectable person. Introduce a signed specimen signature. Required for bank security. Step 5. Submit documents. Completed application form. Address proof. PAN card. Aadhaar card. Photographs. Any other required documents. Step 6. Verification process. Officer verifies all particulars. Checks form completion. Reviews submitted documents. Clears proposal if satisfied. Step 7. Initial deposit. Make minimum required deposit. Receive account opening confirmation. Get issued documents based on account type: savings account, passbook, checkbook, pay-in slip book. Term deposit, fixed deposit receipt. Current account, pay-in slip book, checkbook. Recurring deposit, passbook, pay-in slip book. Now let's move on to advantages of bank accounts. Financial security. Safe custody of money protected from theft and loss. Professional management expert handling of funds. Transaction convenience. Easy payments multiple payment options. Money collection efficient collection mechanisms. Smooth transactions streamlined financial operations. Additional benefits. Loans and advances access to credit facilities. Safe deposit locker secure storage for valuables. Interest income earnings on deposits. Now let's see. Bank operations. Deposit operations. Savings facility build up personal savings. Deposit mobilization collect funds for lending. Minimum deposit no deposits less than 10 rupees accepted. Unlimited deposits no restriction on number of deposits. Withdrawal operations. Check withdrawals through signed checks. Withdrawal slips account holder only, passbook required. ATM withdrawals through debit cards. Standing instructions automatic payments for utilities. Collection services. Accept checks, drafts drawn in favor of account holder. Credit collected amounts to concerned accounts. Interest calculations. Monthly calculation on minimum balance. Periodic credit monthly, quarterly, half-yearly, or yearly. Common periods April, October or February, July. Account management. Branch transfers account portability between branches. Account closure proper procedure with reason statement. Document return passbook, unused checks, ATM cards. Next topic is Postal Banking Services. Current services. Post Office Savings Bank. National Savings Certificate. Kisan Vikas Patra. Monthly recurring deposits. Postal Life Insurance. Pension payments. Money transfer services. Future development. Planned, Postal Bank of India. Network of 1.55 lakh post offices. 90% coverage in semi-urban and rural areas. Rupees 1,000 crore capital investment. Subsidiary of Postal Department. Key insights and important points. This is an interesting bit. Did you know? Banks act as connecting links between those who have surplus money and those who need money. The banking business is not subsidiary to any other business, it's the main activity. All banks must add bank to their names for customer identification. RBI is called the mother of banks or bankers' bank. Critical success factors. 1. Trust and security foundation of banking relationships. 2. Regulatory compliance adherence to RBI guidelines. 3. Customer service-oriented approach with profit motive. 4. Technology integration ATM, online banking, digital services. 5. Risk management careful assessment of lending decisions. Let's conclude this chapter. Conclusion. Banking system serves as the backbone of economic development by mobilizing savings from the public, channeling funds to productive sectors, facilitating smooth financial transactions, supporting agriculture, industry, and trade, contributing to overall economic growth. The evolution from traditional banking to modern digital banking continues to transform how individuals and businesses manage their finances, making banking services more accessible and efficient for economic development. Remember, opening a bank account is the first step toward financial literacy and economic participation in modern society.
Thank you for watching this video. If you have liked, please share it with your friends and like-minded folks. Do not forget to subscribe to our channel and click on the bell icon.